Welcome to Facts Pro, where it's all about facts, financial, accounting, and tax strategies. I've got this question a lot of time. Now I'm a W-2 doctor, or I have a medical practice, and I maximize all the deductions. I've played all the tax loopholes. I've maximized my deduction as far as bonus depreciation, retirement planning, anything that you think of, I've done it. I've hired my children. I've done the Augusta rule. I've done all the basic strategies. If there's something more that I can do, I still get hit with a big tax bill and I need to reduce that. So I want to talk to you today about one of the advanced tax strategies. I'm going to try to hit a lot of those in the next few weeks. So today I want to talk about one of those strategies, which is about the Bitcoin mining. How it works, how does it play a role in tax mitigation? What is it about? Do I need to be an expert to do it? And let's dig in. So let me share my screen with you. And as you know, I always like to start with a joke. And the joke today is about, yes, it's about mining, Bitcoin mining. How does a Bitcoin miner cool down their computer? They open Windows. All right, let's start together. So Bitcoin mining as a tax strategies. How doctors and high earners can reduce their taxes and build wealth using this tax strategy. The problem, as we said, that you, as a high income professional, you face a large tax bill every year, and retirement accounts can only go so far. So, what else can you do to reduce your taxes? That's a question that we get a lot of times. The surprising answer, one of the strategies that we're talking about is the Bitcoin mining, and this can be another business that you go in and it can create a taxable income for you. So we're not only saying that we're wasting money on something that wouldn't generate us income. No, we play on both, building wealth and getting taxable income, and at the same time reduce your taxes. So it creates taxable income and it opened the door to major deductions. All right. So what's Bitcoin mining? Just to start with this question, what's Bitcoin mining? Bitcoin mining is a process of validating transaction on the blockchain. Miners use powerful computers that use a lot of powerful energy to solve complex math problems. So it's like accounting for mining. And when they're successful, they get rewarded with a Bitcoin. But it requires specialized equipment and significant electricity, as we said, like a big energy power. Okay, how does it work? When you get rewarded with coins, this is considered an ordinary income for you, but you also get the expenses, the deductions if you run it as a business. And when you hold it for long term, you get possible capital gain treatment because the goal is to at least keep it for like 4 years to really gain the benefits. Okay, so what are the deductible expenses that you get? Number one is the electricity and internet, because we said it used a lot of electricity. The mining equipment, now with bonus depreciation and with the new bill, this is not phased out anymore. You get actually to deduct 100% of the mining equipment in year one. There is renting, hosting, cooling, home office if applicable, and these deductions can always offset other income and lower your tax bill. Okay, let's see a case study. Like we have Dr. A. She has a high W-2 income, which gets taxed a very high tax bill every year. She started a small mining operation. She put in 30K in it. 30K was equipment of 7,500 that she gets as a write-off in year one, and electricity cost was about 22K. That also she get to deduct as a business deduction. So if she's at 37% tax bracket, that means that she created a loss or a write-off of $11,000 out of the $30,000 that she invested in crypto mining. So this is about 30% or 33% of the investment gets deducted in business deduction, in tax deduction. And she hold it for at least 4 years, which like if anything, if any potential long term, if any potential gain, it would be long term capital gain at a lower tax rate. It wouldn't be taxed at 37%. So she get the deduction at the ordinary income level, but she gets the long term investment taxed at a lower tax rate because capital gains, especially long term, are taxed at a lower rate than the regular ordinary income or short-term capital gains. All right, so that's major, that's big savings. Of course, the higher the amount, and depends on the breakdown between equipment and other costs, you could generate big losses for your that can offset your W-2 income and can offset your business income. All right. So there is a double benefit. As we said, there is a tax saving that you get now because the deductions reduce your current taxable income and your asset grow for later on. So any Bitcoin that you mine, they may appreciate and it gets taxed at a capital gain. All right. What are the risks? There is definitely risk because the volatility of Bitcoin prices, that's why it's not recommended for short term because it gets up and down very easily. But long term, at least on a period over 40 years, it definitely goes up. High energy costs, so this could be one of the risks. And the IRS require you to have a real business structure and documentation. So if you're doing it on your own, you need really to do it in the right way to make sure that you're in compliance. Do you need to be a crypto expert or a miner expert? Not really. You don't really need to be an expert to start mining. Mining can be outsourced to hosting companies like you plug and play service. The key is just that they would treat it for you as a business. So partnering with the right people is the key in this condition. We get to like partner with a lot of people that at age 60 or 70, they have nothing to do with crypto. They don't know anything about the digital currency trading or any of that. But with partnering with the right people, they're able to do this strategy and implement it the right way and take the tax savings and generate more wealth on the long term. So, key takeaways, Bitcoin mining is not for everyone. It's really for the right high income professionals with acceptance of risk, and it can be a way to reduce your today's tax bill and build wealth for the future. If you're looking for like a short-term investment, like less than 4 years, this is not really for you. If you're not a high income professional, then isn't for you. All right, so these are the key takeaways. So if you're a doctor or practice owner looking for advanced tax strategy, now is the time to explore your options. Definitely, this is one of them that you may have not heard of before and you don't know how it really works. So you need to start planning today. Do not wait until April. This is something that if you want to take an advantage of for 2025, you need to implement it in 2025 and not wait till after year ends. All right, so again, here is my contact information. If you want to know more information about it, how to start or who to partner with, I'm happy to help you with this. All right, thank you so much. And let me know what other strategies you want to hear about. And stay tuned with the other strategies we'll be talking about in the next few weeks that are more advanced than the basic that you may have already heard from a lot of other videos. All right, thank you so much and have a good one. Bye-bye.